Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue working with the indicators simple moving average and the money flow index. In today's session, we will be trying to get the buy side of this algorithm complete. We will look to initiate the trades in such a manner that our entry is optimized and we are able to find the opportunities which are likely to get us profit on the bullish environment. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. It's taking a bit time. Okay, so here we are. In last session, I had explained to you how we can get the instrument subscription done, where the Euro USD was used as the instrument of choice. Afterward, the position amount was defined at zero to make sure that there is no existing pending or open position in the account prior to the execution of a new trade, so that we are able to avoid doubling down of any existing position. And these SMA indicated blocks of hourly candle period were added with the look back period of 1 and 6 respectively. And afterwards, these three money flow index indicated blocks have also been put in place with the varying look back period of 1, 2, and 5 respectively. We are also going to take the help of these info candles of get historical candle, first one being hourly and latter two are of 10 seconds each. GMT SMA, and if it is on the higher, then that means the underlying instrument's momentum is on the bullish side. Then we consider the MFI on the hourly time frame. It should have entered into a oversold scenario. That means there has been significant correction in the recent hour, and only in that scenario we want to get involved after due correction. So for that, we will consider the the MFI output value, and it needs to have dipped below 20. So here, this time around, it doesn't really happen, so no trade will take place. So we have to go back in time where we can find such instances where the SMA is on the rise and we have due correction in the underlying instrument. So for that, we will have to consider this instance where we had the SMA on the rise and we had the MFI below 20. So here, as and when it starts to climb again on the higher side, about 20, we will consider the last hour's output value of the MFI and we will compare it to the prior hour, and it should be more and about 20, whereas in the second last hour, it should have been on the lower side. And not only that, we also consider the output value 4 hours back. So in that case, we also need the MFI to have been below 20. So that will mean for a significant amount of time, at least for 4 hours, it has spent on the lower side, consolidating on the lower side. And now that the momentum is again picking up on the bullish side, this might be the time to get involved for a new trade. So that's the logic is. We also need the last hour's closing value to be higher than the opening price. So it means the momentum was sustained in the last hour, so we will have that much more chances of trade holding well. So now we go back to the Visual JForex board and try to get the implementation done. Okay. So let us now start with multiple action. We will put it here. So we are going to use 20 as a critical factor. First input greater than second input, whereas in the hourly candle with the look back of 2, it should have been on the lower side. So money flow index 11 needs to have been below 20, and here we need first input to be greater than second input. All right, then we consider the entry point, which is going to be the closing price of the last hourly candle. So as soon as the price starts to rise above the last 1 hour's closing price, we'll look to initiate the trade. So for that, we are going to compare these two 10-second candles closing prices with the last 1 hour's closing price. Last 1 hour's candles, which is candle 18's closing price. Both of these if blocks, and then we compare it with candle 19 candle close and candle 20 candle close. So here is this, it should have closed on the higher side. So again, first input greater than second input, and candle 20 candle close, which is the second last 10-second candle. It should have closed on the lower side. After that, going to be a, you can define it both ways, pending open or current market price. I think this time around we will go for a open at market. All right, first input less than second input. Now let me arrange this blocks on the lower side. Fill to our formation. Coming to the defining of input parameters for the trade command, we will keep the default instrument as it is. Trade amount I will change to 0.1 million. Slippage 2 pips is good enough for Euro USD. Euro USD is one of the most liquid instrument in the market. Stop loss and take profit, we will keep it dynamic. So whatever is the difference between last 1 hour's closing and opening price, we will consider it. Or you can even consider the difference between high and low. So you get the measure of volatility in the underlying instrument, and then you can decide. So we will consider the last 1 hour's opening, sorry, not opening, high and low difference, and we will take that as the stop loss, and twice of it as the take profit. Okay. So we need a mathematical component here, calculation expression. Now coming to defining of the stop loss and take profit, I will define these variables here and then we assign these newly created variables to the calculations results. Okay. I will name it TP, take profit. This is going to be a simple calculation. We just have to consider the candle 18's high and low difference. So for that, we take candle 18 candle high and deduct candle 18 candle low. So as per Excel convention, it is going to be A1 minus A2 and this result will be high low difference, and we take this difference and multiply it with 10 raised to the power 4, as Euro USD has 4 decimal points and we have to use the integer data type, so we need the pip conversion done from decimal points to integers. So it will have a value of 10,000. Okay. It is going to be A1 into A2, and this will be our stop loss. And now we have to multiply the stop loss by 2 to get take profit, as we need the risk reward ratio of 1:2. Start value of 2. Okay, so this is going to be A1 into A2, and now I will join it on the lower side. Let us color code it to see if the buy side which we have defined, it is getting the iteration flow till the very end. Yes, it seems to be working all fine. So we get this get command block where it belongs. So that's it from my side for the day. We have the buy side of the equation completed, and in the subsequent session I will be demonstrating coverage of the market developments. You can check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there too. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.